Up here, that's fine. I started my career as a mayor of a small town. And on every Thursday, it was my responsibility to sign the paychecks for the 52 people who work for the city. All right. Well, good afternoon and welcome to the October Crop Production and WASDE briefings. My name is Lance Honig and I serve as chair of the Agricultural Statistics Board at NASS. This briefing is for the Secretary of Agriculture and other policymakers at USDA to better understand the content and context of today's reports. We are honored to have Secretary Tom Vilsack joining us today. Along with him is Dr. Seth Meyer, USDA's chief economist. Mr. Secretary, I'd like to share that we have a number of visitors with us today, as you've seen around the room. We've got some folks from the Minnesota Soybean Association, members of the House Appropriations staff, USDA staff from across many areas, including REE, Office of Congressional Relations, Office of Budget and Program Analysis, the Office of Operations, and the Office of Safety, Security, and Protection. And we've even got a couple of staff family members joining us today. So welcome to all of you. I'd also like to express our appreciation to Jennifer Patat from our Louisville office and Matthew Potler from Athens, Georgia office, who came in to assist us with today's report. Before I turn things over to our presenters, I do have a few notes for our live streaming audience. The crop production and WASDE reports are considered principal federal economic indicator reports. The Office of Management and Budget provides specific guidance on how these important reports are to be released. OMB statistical policy instructs policymaking officials to refrain from making public comment regarding the content of these reports within 30 minutes of their release. Therefore, we will not be taking questions from the public during this briefing. Both NASS and World Board staff are available for phone or email questions, and NASS will host a social media event at 1 o'clock Eastern Time today. We strive to have everything presented at this briefing match the official record. However, should there be any discrepancy, always refer to the official published estimates. With that, I'll turn things over to Patrick Boyle. He is the chief of the NASS Crops Branch. Patrick will be immediately followed by Dr. Mark Jekanowski, chair of the World Ag Outlook Board. Patrick.
All right. Good afternoon, everyone. Thank you for joining us today, and welcome to those who are tuning in on the live stream as well. We've got a lot to cover, so we'll go ahead and jump right in. As we normally do, anytime we want to highlight changes or key details within a report, we included a special note on the cover of today's publication. There are actually two topics covered in today's special note. First, as we're all aware, the Southeast United States has experienced several significant weather events in the last few weeks. And to ensure that our data users understand how these storms impacted our data collection processes and in turn the data itself, we added some clarifying statements right up front. Additionally, we wanted to remind our data users that in October, we have the opportunity to revise acreage estimates for canola, dry edible beans, and sunflowers. While we look at all available data information, the big driver behind these changes is the FSA certified acreage information. And I'll talk a little bit more about those crops a little later in the presentation. Speaking of weather events, I wanted to really quickly share an example of one of the many maps that have been generated in the last week or so by NASA's Research and Development Division. This is part of their normal disaster analysis products, and this map in particular shows Hurricane Helene's track, as well as some indications on wind speeds associated with the storm. You can see it's overlaid on top of our cropland data layer, and this just helps give data users an idea of where crops are grown in relationship to the path of the storm and how those crops may have been affected. A complete package that our research staff put together for Hurricane Helene is available on our website. And I know that they are currently working on similar information for Hurricane Milton that just crossed over Florida earlier this week. Now on to the October crop production report. Before we get into the acreage and production data though, this slide provides a quick overview of our primary data sources. First, our ag yield survey, that's our operator survey. At the end of September and into the first week of October, we reached out to just over 7,500 farmers across the country. We asked them what their expected yields were, or if harvest was complete, what their final yields were. Next, in green, you'll see some information about our objective yield and objective measurement programs. These are where our trained enumerators go out to corn and soybean fields in the major growing areas and citrus groves in Florida. They take measurements, collect samples, and collect samples that provide important indications that help us determine yields and total production for those crops. You can see the sample sizes and the data collection windows listed right there in the middle and far right columns. We also took into account several non-data sources. These include yield indications based on satellite data, mainly in the Corn Belt. And as we've done in recent months, we also considered the latest certified acreage information from Farm Service Agency. One quick slide on our October ag yield survey, that producer survey I mentioned a moment ago. On this map, you'll see how those 7,500 samples were distributed by state. In general, the states with the larger sample sizes are the ones that had more commodities of interest this month. And on this map, the darker the shade, the higher the sample size. We'll start off with corn today. This chart shows the percent of the corn crop that has been harvested by week. And this is from our weekly crop progress and condition report. The red dotted line is 2024, and you can see that by October 6th, 30% of the corn crop has been harvested. And that is pretty much on pace with last year and slightly ahead of the 5-year average. So nothing really too out of the ordinary here. Now, we'll take a look at the acreage and production data for corn from today's report. There were no changes to planted or harvested acreage from our September forecast. However, acreage is down just over 4% from last year. Yield at 183.8 bushels per acre is a record high, and that's up 0.1% or 0.2 of a bushel from last month. It's up 3.7% or 6.5 bushels from last year. As a result, total production at 15.2 billion bushels is up slightly from September, but down 0.9% from 2023. This chart shows how the current month's yield projection ranks historically. That green line shows the final yields for each year, and then this month's forecasted yield. The gray line represents a trend line, which is a moving historical average. As you can see, at the record high 183.8 bushels per acre, we are actually only slightly higher than the trend line. Now here's a breakdown of the corn yields by state, just to give you a little orientation on what all the numbers and colors mean on this map. The top number is the current yield forecast measured in bushels per acre. The bottom number is the percent change from the previous month's forecast. If you see a pound sign next to the top number, that represents a record high for that state. States shaded in blue are showing an increase from the previous month, while states in red are showing a decrease. The deeper the color, the greater the change. States in gray are unchanged from the previous forecast. As you can see, we are forecasting record yields for a number of states throughout the major corn growing areas. Up next is a very similar map, except this one shows the change from the previous year. You can see most of the Corn Belt states are showing year-over-year increases, while hot and dry conditions earlier in the year in the east and southeast had driven yields down in those areas. Here's a quick example of some of that satellite data I had mentioned earlier. You can see the different shades and colors there and the corresponding modeled yield projections. The green and blue shaded areas indicate higher yields, while the yellow and orange indicate lower yields. I'd mentioned earlier our objective yield survey. On this chart, what you're seeing is the percent of our corn objective yield samples that were processed by our laboratory in St. Louis this month. And what I mean by that is as fields mature and dry down, just prior to harvest, our enumerators will gather samples and send them to our lab for further analysis. As you can see, about 83% of the samples were sent to the lab this month, and that's down slightly from October of 2023, but definitely in line with recent history. Here's another data point from our objective yield program. This chart includes an important measurement taken each month now through harvest. It's an estimate of the number of ears per acre from sampled fields in the major growing areas. It also has a comparison to recent years. The blue vertical bars indicate the number of ears per acre, while the red dot shows the corresponding forecast yield for the 10 states in our objective yield program. You can see for this month, at just over 28,600 ears per acre, we are down compared to last month and last year's historically high counts. Next, a quick look at corn total production and how it compares to recent years. As I mentioned a moment ago, production is forecast at 15.2 billion bushels. If realized, this would be the second highest level on record. Finally, our last slide for corn, a look at how this month's forecast compares to a sample of published pre-report industry expectations. Now, the way this chart is laid out, each of those blue dots represents an individual industry member's published forecast of total corn production, and the red square represents NASA's forecast each month. As you can see, our estimate is near the middle of the industry expectations, so it appears anyway that today's corn number shouldn't raise too many surprises. Next, we'll move into soybeans. I have some charts and graphics for soybeans that are very similar to what we just went over for corn. First up is from our weekly crop progress and condition report. You'll see that as of October 6th, 47% of the soybeans have been harvested. That's ahead of both last year and the 5-year average. Now, an overview of the acreage and production data for soybeans. As was the case for corn, both planted and harvested acres were unchanged this month. Unlike corn, though, soybean acreage is up from 2023. Yield is estimated at a record high 53.1 bushels per acre. That's down 0.2% from last month's forecast. Now, while we are down slightly from September, soybean yields are up nearly 5% or 2.5 bushels when compared to last year. As a result, total production is forecast at a record high 4.58 billion bushels. This is down slightly from last month, but up more than 10% from 2023. Next up, a chart showing how the current yield projections ranks historically. As I mentioned on the last slide, at 53.1 bushels per acre, 2024 is forecast to be a record high for soybeans. Although you can see on this graphic, again, we are only slightly above the historic trend line. Here's a breakdown of the projected soybean yields by state. Again, the top number is the current forecast. The bottom number is the percent change from last month. As was the case with corn, you'll see a number of record highs, including Iowa, Illinois, Missouri, Texas, Arkansas, Mississippi, Michigan, and New York. Once again, a very similar map, except this time with a comparison to the previous year. There's quite a bit of blue on this map, which again indicates year-over-year increases. Another real quick look at some satellite data. These are yield indications based on remote sensing modeling. You can see where soybeans are grown and the variation of yields from state to state. Again, the blue and green colors indicate the higher yields, while yellow and orange areas indicate lower. Next up is another data point from our objective yield survey. The procedures are similar to what I had described earlier for corn. For soybeans, 55% of the samples were processed at our lab this month, so slightly ahead of the last couple of Octobers, but certainly within range of what we'd expect to see this time of year. Here's another objective yield metric, again, similar to corn, although this time, instead of ears per acre, we're looking at number of soybean pods in a randomly placed 18 square foot area. And this is for fields sampled throughout the major growing areas. The vertical blue bars show the estimated number of pods, while the red dot is the corresponding yield forecast for the 11 states in the objective yield program. As you can see, coming in at just over 1,800 pods this month, counts were up slightly compared to both last month and last October. Next, a quick look at total production for soybeans and how it compares to recent years. As I mentioned earlier, if realized, the 4.58 billion bushels is a record high and 10.1% over last year. Finally, our last soybean slide. This graphic again shows how NASA's monthly production forecasts compare to the pre-report industry expectations. Again, the blue dots show those individual industry member estimates, while the red square is the NAS forecast. You can see this month's forecast for soybeans is right in line with industry expectations. So hopefully, again, no surprises there. Now on to cotton. Harvest progress. As of October 6th, 26% of the cotton crop had been harvested nationwide. And now just a quick note, a hurricane-related note, as of September 29th, the week before, which was just a day or two after Hurricane Helene passed through, Alabama, Georgia, and the Carolinas all reported less than 10% harvested. So there was quite a bit of cotton still in the fields as the storm hit. Of course, we will be monitoring the situation very closely. The full impact of the storms will certainly become more clear in the coming weeks and months. For now, here is a summary of the acreage and production data for cotton from today's report. Acreage remained unchanged from last month, while yield and production both decreased by just over 2%. Again, like we had for corn and soybeans, this chart shows how this month's cotton forecast ranks historically. Today's forecast is the lowest yield since 2015, and obviously well below the historic trend line. And here's a breakdown of cotton yields by state. Once again, the top number is the current forecast, except this time it's measured in pounds per acre. The bottom number is the percent change from the previous month. You can see most of the hurricane-affected states down in the southeast are showing decreases from the September forecast. Now, Texas, on the other hand, is our largest cotton-producing state, is actually up 7% from last month. And here's a yield comparison to the previous year. Quite a lot of red on this map indicating year-over-year declines, and that includes 4 of our 5 top cotton-producing states. Next, a quick look at total production and how it compares to recent years. This month's forecast at 14.2 million bales is up 17.7% compared to last year. Now our last cotton slide. Again, the industry expectations. It's kind of hard to tell on this graphic, but there's actually quite a pretty tight grouping of blue dots right in and around that red square there. So today's cotton number certainly within range of what many were thinking for pre-report expectations. Now, a quick look at the other field crops included in today's report. Starting at the top there with canola. Canola is one of those crops I'd mentioned earlier, and we made some acreage updates this month. As you can see, canola is up across the board. We are forecasting record high planted acreage, harvested acreage, and total production this year. This month's yield forecast at just over 1,800 pounds per acre is the 5th highest on record. No acreage changes for dry edible beans from our previous estimates. However, acreage is up nearly 30% compared to last year. Total production at over 29 million hundredweight is the highest since 2020. Alfalfa acreage is down fractionally from last year, but the yield forecast of 3.45 tons per acre is the highest since 2004. And that puts total production at its highest level since 2019. Other hay is also down, but yields and total other hay acreage is also down, but yields and total production are up compared to 2023. Total production of just under 73 million tons would be the highest production since 2016. For peanuts, acreage is unchanged from the last forecast, but up from last year. Yields and production are showing declines from the previous forecast, but total production is up nearly 10% from 2023, and that marks the highest level since 2017. Next up, rice. As you can see, rice acreage is unchanged from our previous forecast, while yield and production are up slightly. Sorghum acreage is also unchanged from our previous estimate. However, it is down compared to last year. Forecast yield of 57.7 bushels per acre is up 0.7% from last month and up 11% or 5.7 bushels per acre compared to last year. Production is up slightly from September, but down a little over 4% from 2023. For our sugar crops, sugar beet acreage is down year over year, while yield and production are both up. And we have a similar story for sugar cane. Harvested acres are down slightly from last year, while yield and production are both up from our previous forecast and last year. All sunflower production is forecast to be at its lowest level since 1976, and this is driven by significant acreage reductions. At 720,000 acres and 691,000 acres respectively, this month's forecast for planted and harvested acreage are the lowest on record. There is one bright spot for sunflowers, that's yield. At just under 1,900 pounds per acre, this would mark the highest yield on record. And the last of our field crops to be for discussion today is tobacco. At 171,000 acres, this is the lowest harvested acreage on record. Yields are down from both the previous forecast and compared to 2023. If realized, total production of just under 338 million pounds would be the seventh lowest production since record keeping began back in 1866. Now we'll switch over to non-citrus fruit and nuts. We just have pecans this month. October marks our first forecast for pecans this season, and we are estimating total production at just under 271 million pounds. This is the lowest production level since 2021, and it reverses this upward trend we've seen the last few years. And now, last but certainly not least, our first production forecast for the season for citrus crops. Just a reminder that these data were all collected prior to the recent weather events, so the effects of the storms, particularly in Florida, are not reflected in these numbers. Starting off with all orange production, we are forecasting a 5% decrease from last season. You can see the non-Valencia oranges are down 0.8% from the previous season, while Valencia oranges are down nearly 14%. Grapefruit production is forecast to be down 11.6% or 990,000 boxes from last season. All three major grapefruit producing states, Florida, Texas, and California, are expecting year-over-year decreases. Grapefruit production is forecast to be down, lemons. Lemons are kind of an outlier on this page. We are forecasting an increase in production this season at just under 1.1 million tons, Production is expected to be up 7.5% from last season. Finally, tangerines. Total production is forecast to be down 8.8% or 2.45 million boxes from last season. At just over 1 million tons, that would be a record low. And before I wrap things up, here's a look at a few of our upcoming reports. We've got a couple of special reports from our Census of Ag program due out on the 17th and 31st of October. We'll have rice stocks on the 23rd and the care reports out on November 1st. And then looking ahead to November 8th, we'll all be right back here again for another crop production report. And we'll also have cotton ginnings out that day as well. Additionally, we'd like to put in a plug for our fall data users meeting. This is an all virtual event, and it'll take place next week, Tuesday and Wednesday, the 15th and 16th. This meeting is free and open to the public. However, registration is required. You can find out more about this event on our website and register there as well. Finally, as Lance mentioned earlier, we will be hosting a Stat Chat social media event at 1 o'clock today on X, where we'll take questions and share additional information about today's report. So as always, the full reports are available on our website, and that concludes my portion of the briefing. So I will turn it over to Dr. Jekanowski.
All right, thank you. Good afternoon, Mr. Secretary. So I'm going to walk through the WASDE, through the changes we made this month. Just a quick summary reminder. So we got a large tranche of data from NASS about 2 weeks ago, September 30th, grain stocks report, small grain summary. That all gets incorporated into the October report, along with all of the information you got this morning from the crop production report. Indian will also, we'll also talk a little bit about India and Brazil along the way. So let's start out with wheat, global wheat production. Global wheat production adjusted a little bit lower this month, down 2.8 million tons, but that would still be record large production globally. Some fairly important changes across a few of the countries here. EU wheat production down 1 million tons. That's mainly lower, smaller crop in France, reflecting some weather problems they've had there. Similarly, Russia also down 1 million tons, also reflecting some weather conditions were the opposite there. Too wet in France, too dry in Russia. Ukraine up a little bit, that's just reflecting some government data, and also India down, also just incorporating some government data into that as well. In terms of the global supply and use, a few things to note here. Beginning stocks, we raised this month almost 1 million tons, 900,000 tons. That mainly reflects some adjustments in Russia's stocks, reduced feed use in Russia, and that's based on Rostat data. So that's driving that change there. Total wheat use globally down 2.4 million tons. That is primarily food, seed, and industrial. So mainly lower food use in India and Afghanistan. Trade down 700,000 tons this month. Lower exports out of the EU. So we're going to see the lowest, expecting to see the lowest exports from the EU since 2020. But partially offsetting that, fairly strong exports from Ukraine. We raised our Ukraine wheat export forecast by 1 million tons, now at 16 million. No change to our Russia export forecast. Ending stocks, still the lowest, up a little bit, but still the lowest since 2015-16. And this month, we're looking at a little bit higher stocks in Russia and the EU, offset by smaller stocks in the Philippines and the US. Speaking of the US balance sheet, I didn't get any new information this morning regarding wheat production, but we did incorporate to the 2023, the back year balance sheet you see there, 2023, 2024. That incorporates the revisions from the grain stocks report, in particular some June 1 revisions from that report. So that back year is essentially finalized at this point. For the current crop year, 24-25, incorporating the production from the September 30 small grains summary report, of course, and along with trade data. So imports up a bit this month, 10 million bushels. That is primarily spring and durum coming in from Canada. Feed and residual adjusted upwards 10 million bushels based on the September 1 stocks report. And overall, no change in our export forecast, but there are some offsetting changes by class there. And we've made no change to our season average market price forecast for wheat. And we're, somewhere around 44% market at this point. Global rice production. So our rice discussion is going to be dominated by India this month. So world production up 3.1 million tons. You can see that India's the increase this month in India by 3 million tons accounts for the bulk of that. Small increase in Egypt as well, 300,000 tons. That's mainly reflecting some information from FAS Post. Area increase reflecting some reduction in government restrictions on acreage, rice acreage there. Japan up a little bit. That's also some information from Post. And Philippine rice production forecast down a bit this month, and that's just reflecting some government data, quarterly estimate from the Philippine government, and that is a reduction in the area. So let's talk a real quick a little bit about India, since that is dominating the discussion this month. So a little bit of background, India produces two main crops, three crops overall, but two primary crops, the Kharif crop and the Rabi crop. Harvest of the Kharif crop is just beginning. And that accounts for the largest share of India's rice production, about 65%. And what we were looking at over the course of that production season, growing season, the conditions started out pretty dry. Pretty slow start to the monsoon, leading to some early indications that maybe rice production would be down. Maybe we'd see lower area. And planting got off to a very slow start. The red line there is 2024. That's the current year. Planting was very low at the low range of all the most recent years. But then the rain started around mid-July. Once the monsoon hit, the rains came and we saw really good precipitation, especially through August and September. So planting caught up, and in fact, planting was delayed but expanded from or exceeded earlier expectations. Total precipitation from this monsoon across India this year was well above the historic average, up about 8% from the historic average. And when you get such generous rain conditions, we expect production to follow. So production raised this month to 142 million tons in India. That would be the 9th straight consecutive record production in India. So continues to grow. So global balance sheet also, here again dominated by our outlook for India. Beginning stocks raised this month 2.4 million tons. That is government data again from India, mainly higher stocks being held in India. Production we talked about, mostly India. Total use will hit a record, expected to hit a record this year, 528.1 million tons. Our trade forecast, we raised by 2.2 million tons. And again, that is mainly India. As you know, they recently dropped their export ban on non-basmati white rice. So we expect higher exports out of India, partially offset, of course, by lower exports from countries that benefited from that ban, including Thailand, Vietnam, and Pakistan. Ending stocks up as well. That also is driven largely by India. India's ending stocks forecasted a record high 43 million tons. U.S. rice balance sheet. Not a lot going on here. Tiny nominal change in yield this month when you look at it nationally. So a little bit increase in production, just raises ending stocks, no change to anything else in the balance sheet. Let's move into corn, global corn production. We'll talk a little bit about the U.S., of course, higher production there, raised by about 500,000 tons. Outside of that, we have some harvest results from Ukraine and Russia. That's driving those reductions there in the FSU area. Ukraine down 1 million tons, Russia down 500,000 tons. And then India just adjusting a little bit higher there based on some government data, higher both area and yield. Global balance sheet for corn. Beginning stocks higher this month. That is reflecting some revisions to Argentina's production. Going back a couple of years, and also some relative weakness in Brazil's exports. So raising the ending stocks for Brazil, therefore the carrying stocks globally for corn. Feed use raised this month 2.1 million tons. That is mainly higher feed use in Argentina and India, reflecting larger crops there. Ending stocks down a bit. That's lower stocks in both China and the US. We'll talk about US in a minute. Partially offset by higher ending stocks in Argentina. The other thing that's worth noting here globally in terms of the global corn supply and demand is we're generally seeing a lower level of imports by China, corn imports by China, from Brazil as well as from the US. We lowered our total China corn import forecast this month by 2 million tons. That's following a reduction last month as well by 2 million tons. So we're down 4 million tons over the past 2 months to 19 million. US corn supply and demand balance sheet. Put up the back year balance sheet 23-24, just to note that essentially those numbers are final at this point based on the September 30th grain stocks report. And that implied a little bit tighter carry-in stocks, 51 million bushels coming into the new crop, lower than we had been forecasting. Small change in production as we heard just a few moments ago, lowers total supply, but we're seeing some strength in exports. Maybe not so much to China, but to a lot of other countries, Mexico in particular. So based on that recent pace, we raised our export forecast 25 million bushels, now at just over 2.3 billion. And ending stocks tighten up almost 60 million bushels. No change to our season average price forecast at this point. Global soybean production, not much to talk about here. As well, small change in the US, which we'll get to in a minute. That change in the foreign supply, that is all attributed to Ukraine and harvest results there, showing a little bit smaller crop than we had been forecasting. But let's talk a little bit about Brazil because it has been getting a lot of attention lately in the media. So this is the time when soybean planting, especially in Mato Grosso, really tends to pick up there in northern Brazil. But the story has been lately, it's just been dry. Slow start to the rainy season. So again, that red line at the bottom, that is the current year, 2024. Delayed monsoon, getting a little bit of rain here and there. Raising some concerns potentially about implications for area and yield. And we've seen an unusually slow start to planting pace. Again, that's that red line there. We're right at the lower range of the amount that would typically be planted about this time of year. But it is also worth pointing out here that it is relatively early. Farmers in Brazil typically start planting when they achieve about 30 millimeters of rain. This year, we haven't quite reached that yet. So the way to read this graph, the dates on that y-axis there on the left, that is historically the date of each of those years where that part of Brazil typically reaches the 30 millimeter minimum for planting to usually begin. Again, 2024, we haven't quite reached there yet. That's this delayed monsoon. But it's important to point out, also on this graph, we graph yield, historic yield, and linear and a trend yield. And there is very little relationship between the timing of that initial 30 millimeters of rain and the ultimate yield that is achieved in Brazil. So all this to say, at this point, we're still quite comfortable assuming trend yields for Brazil, despite the dryness that we've seen so far this planting season. A little bit about the global soybean balance sheet. Again, not a whole lot going on here to talk about. Let's just note Global crush down 300,000 tons this month. That is primarily reflecting lower crush in Thailand, reflecting lower imports by that country. And trade down a bit. That is mostly attributed to Ukraine, lower exports out of Ukraine, reflecting their smaller crop. US balance sheet, really pretty small changes. The old crop year, 23-24, incorporating the September 30 grain stocks report. So that is essentially finalized. That implied a small 2 million bushel increase in begetting stocks, along with the very tiny production change we got this morning, reducing production by 4 million bushels, leads to just a 2 million bushel change in supply, which we just comes out of the residual, practically rounding error when it comes to the global balance sheet. No change to our season average price forecast at this point either. World cotton production. Now here's one commodity where we did get a fairly large change in US production. 300,000 bales. We'll talk a little bit more about that in a few slides. Global cotton production up, however, about 200,000 bales. Larger crop in China. They've really experienced ideal weather there, so that is a yield increase. Higher yield expectations for China. And otherwise, Brazil, latest harvest results, that harvest just wrapped up fairly recently. So that's government data. And Argentina, that is an area increase. So the global balance sheet for the old crop year, 23-24, just really truing up data, especially trade data. We raised back year consumption, 700,000 bales. That is primarily China, reflecting the latest consumption data from China. For the new balance sheet, 24-25, main thing to point out there, trade, global trade down 500,000 bales. 300,000 of that is from the US, lower exports by the US. And we also reduced, it's worth noting, doesn't show up here exactly, but we reduced China's imports by 500,000 bales. They have a bigger crop and they have just they've been pretty slow buying. So that's showing up in the trade data. US cotton balance sheet. So here's where we incorporated the production change we heard about just a few minutes ago. So production down 310,000 bales. Also, we're seeing lower consumption in the US. So mill use, we reduced that 100,000 bales, and that's just been on a pretty steady decline. Continues to decline. Exports, I noted already, we reduced our US export forecast by 300,000 bales, just a pretty slow pace of exports overall. Mills worldwide are kind of in a hand-to-mouth mode, just buying as they need to. So showing up as a relatively slow export pace for the US. And with use down more than production was reduced, ending stocks actually are up a bit this month, 100,000 bales. No change to our season average price forecast. All right, our last crop to discuss before we get quickly into livestock is sugar. And sugar balance sheet. So 2023, 2024, some changes there in terms of production. Mainly what you're looking at is some shifting of production that we expected to happen in September of this year, shifting into October, into the new crop year. It's just been hot in a lot of the beet production areas, especially of the US. So a lot of the crop that we expected to be harvested in September is being pushed into the new crop year into October. So that's the reductions that you're seeing for production for both beets and cane. For the old crop year, much of that is just shifting into the new crop year. Imports, TRQ imports down for the old crop year. Again, this is mainly just an accounting issue here. FTA, these are FTA imports. FTA volumes are calculated on a calendar year. And so some of those imports we expected to come in September, which would have been the old crop year, are just shifting into October through December. So some of those will shift into the 10,000 ton increase in TRQ we expect for 2024-25. High tier imports raised this month for both the back year and the new year. For the back year, that's both refined and raw sugar. For the new crop year, 24-25, that is reflecting some shipments, some raw sugar shipments that just recently came in. As you know, we don't forecast raw sugar shipments, so we track those as they come in. So that is the increase, that explains the increase for 2024. Old crop beginning stocks down 47,000 short tons. That tightens up the new crop beginning stocks by the same amount. Incorporating the changes this morning from NASS in terms of U.S. Beet and cane production. No changes to the rest of the demand side of the balance sheet. Ending stocks increased by 12,000 short tons, and stocks to use ratio up to 14.3% for the new crop year. Real quick in terms of Mexico balance sheet. The old crop year, 23-24, worth noting here that Mexico continues to import sugar. That is based on some FAS post reporting. And that is raising their ending stocks, and therefore their beginning stocks by nearly the same amount. Exports also raised this month for Mexico for the new crop year. Those would all be exports to third countries, not to the U.S. So let's wrap things up here with meat and dairy. Beef production raised this month for both 2024 and 2025, reflecting recent observed higher slaughter, both steers and heifers, along with higher weights, and that expecting to carry into 2025. Along with, we've seen a little bit of an uptick in placements recently, fourth quarter, that'll carry into 2025, resulting in higher production there as well next year as well. Pork production down a bit for current calendar year, 2024, just based on lighter weights. 2025 forecast, a little bit of an increase there, just primarily reflecting the new information from the hogs and pigs report that we got at the end of September, suggesting higher farrowing intentions. Broiler production down a bit for 2024. That mainly reflects lower production or downward revision in production for the third quarter, 2024. But we've actually seen some growth in the fourth quarter and hatchery data suggesting some expansion there. So it's netting out to a small reduction in broiler production for 2024, but the growth is expected to carry into 2025 and reflecting strong demand for chicken broiler products in general. Turkey, on the other hand, turkey production down in 2024, reflecting just recent slaughter data. And we expect that slower pace to continue into 2025. Livestock prices, we've been observing quite a bit of strength for both cattle and hogs. So steer prices, hog prices increased for both years this month. Broilers Also seeing some good demand strength for broilers, supporting prices there for both 2024 and 2025. Tiny increase in our turkey price forecast for 2024. We haven't seen a price increase in quite a while, and there we see just a little bit. Mainly up, prices were higher in the third quarter, but again, down again in the fourth quarter. And we expect that weakness to carry into 2025 based on continued persistent weak turkey demand. U.S. meat trade. For 2024, we're just truing up to most recent census data through August. For 2025, we're anticipating some growth in pork exports, reflecting higher production, producing more, so we're going to export more. Broiler exports, on the other hand, for 2025, we're seeing a lot of price competition from Brazil, cutting into some of our export markets to some degree. So that's reflected in that lower forecast for next year. And beef imports continue to grow, continue to show quite a bit of strength, mainly processing grade beef coming in from Oceania and South America as well, especially Brazil. And I'll just note, worth noting that today at 3, FAS will release its PS&D livestock and poultry data with the first official forecast for 2025. Now, wrapping things up with dairy. Generally, we're seeing some pretty strong demand for cheese and butter. That's driving both the import and the export forecasts there. Higher imports and higher exports on a fat basis, mainly cheese and butter. Milk production adjusted slightly lower in both 2024 and 2025, reflecting long-term trends and lower growth in milk per cow. And then in terms of trade on a skim solids basis, seeing some strength in exports. That is mainly competitive prices, U.S. prices for non-fat dry milk. But we expect to lose some of that competitive advantage into 2024. It'll be a little bit less competitive, and that will reduce that. That's why we reduced our export forecast on a skim solids basis for 2025. And finally, in terms of dairy product prices, mainly what you see here is some a little bit of a pullback, some adjustment in our cheese and butter prices. Essentially, we've seen a price correction over the past few weeks. Those prices have been extremely strong coming into the last WASDE, and then through the end of last month. But we've just seen them pull back a bit in the past few weeks. We expect so that's driving our price forecasts a bit lower for both 2024, and we expect that now to continue into 2025. All of the class prices and all milk prices are lowered this month as well by a bit, still relatively strong overall. But again, those class prices are driven in this case by the lower prices for cheese and butter that more than offset the stronger prices for dry whey. And that wraps up my WASDE presentation. The other thing I would just like to note for all you folks who are joining us today, I want to note that Shale Shagum has been our livestock chair since January of 1999. This is his last WASDE report. He'll be retiring at the end of next week. So if you do the math, he has chaired over 300 WASDE reports in his career. And for some perspective, this is only WASDE number 653. But just want to know that we're really going to miss Shale, and we wish him the best. And with that, I will wrap it up and thank everyone who joined us today, including those online, and we hope to see you back.